Ladies and gentlemen, we're moving on in our program. Next up is a panel discussion, Investors' Perspective by Justin Hall, Dimitra, Taslim, and Lauren Pfeifer. I would like to introduce each of them to the stage. The first speaker is Justin Hall. Justin Hall is partner at Golden Gate Ventures, a Series A fund investing across Southeast Asia. He is focused on portfolio management and deal sourcing and invests in consumer-facing technology companies such as payments, marketplaces, media content, and verticalized e-commerce. Welcome, Justin. Our next speaker, Dimitra Taslim. Dimi is part of India and Southeast Asia team at GGV Capital, a $6.2 billion global multi-stage VC that invested in Airbnb, Alibaba, ByteDance, Ctrip, Didi, Grab, Slack, Square, and Xiaomi. Previously, he was an entrepreneur building a digital investment platform that provides access to institutional quality wealth management. And our last speaker, of course, is Lauren Pfeifer. Lauren Pfeifer is a venture capital investor at Maschmeyer Group Ventures, an early-stage venture firm in San Francisco that invests in seed-stage startups. Prior to MGV, Lauren was associate of 500 Startups in their Series A program, helping companies with growth and distribution. So let me pass the microphone to you.
Welcome, Bangkok. How is everyone? Woo! Sawadi. That's my. So thank you guys for coming. Before we kick this off, I just thought I would welcome Justin and Dimi as well. We have a lot of great information, so stay tuned. But before we kick off in the discussion, I wanted to ask how many of you in here are entrepreneurs? Is anyone here an entrepreneur? Okay, great. How many of you understand or know what venture capital is? Okay, fine. All right, great. So before we kick it off, I'm gonna ask Justin and Dimi if you guys could do a high-level explanation of venture capital and what should the audience know about investing in startups and whatnot for beginners.
So I'll start. Yeah. Sure. So a very high-level concept of venture capital is that as investors, we are essentially investing in founders to create their startup, to help that startup scale, and eventually help that startup get acquired or go public so everyone is happy. That's a very high-level concept of venture capital.
And I'll add a layer. I think Justin explained that really well. But above the venture capital funds, we have the pension funds, the university endowment funds, like the Yale Endowment, the Harvard Endowment, and these people invest money in venture capital funds that then invest in founders. So we're sort of the middle layer that looks for deals and looks for founders between the founder layer and also the kind of the investors like pension funds and the universities.
And I'll add on to that as well. So if you're an entrepreneur right now and you're looking for money and you have an idea, but you don't have the amount of capital to scale it, where would you go to fund your idea? And so you have different levels of venture capital. You have angel investors that can write smaller checks for you to scale your business. And then you have the venture capital funds like Golden Gate Ventures and like GGV Capital, but those are much later stage. But then you also have venture capital funds like 500 Startups here in Bangkok or Kuala Lumpur or Jakarta as well that can invest money in your company too. Justin, what stage do you guys focus on and what are some metrics you can share?
Golden Gate Ventures is a Series A fund, but we do invest in pre-seed and seed. So basically that just depends on the maturity of the company. Generally speaking, we like to invest in companies that have about 12 to 18 months worth of in operation, but there will be instances when we want to invest in a startup that's very, very early, very, very raw, because we think that the startup has a lot of potential or the founder has a lot of potential and we want to get in very early.
All right, Dimi, what about you? What do you guys look at in terms of stage and scale and vertical?
So we have to be really good friends with people like Justin. Because we go a bit later, we invest anywhere from Series B to pre-IPO, and our check sizes are anywhere from the official statement is 5 to 50 million, which is a huge range. So we can do anything from Series B to Series C to Series D and all the way to pre-IPO. And so it's important for us to work with people like Justin so that we can get his best deals and invest in those companies.
That's great. And then we focus predominantly on San Francisco, but I used to work at 500 startups a couple years ago, and we had offices all around the globe, depending on what your focus was, whether it was finance, whether it was e-commerce, or whether you were trying to create your own ByteDance equivalent for your local market. Those are all ideas that we would look at depending on your background. So for the founders in the audience, guys, what are some tips that you can offer founders? Let's say if you're a seed stage entrepreneur, what are some things that you guys they need to have for them to even be ready to have a meeting with you? Justin, do you want to start?
Sure. So my best advice would be to simply start. I think there are a lot of founders that they're afraid to take that step, afraid to take the plunge. They're trying to prepare everything, and then when they prepare everything, it'll feel right, and then they can just break into a startup. I think there is some preparation that's helpful, but ultimately at the end of the day, you need to take a risk. It's always going to be a risk to quit your job, to change, to do something extremely risky, like doing a startup. And if you just take that initial plunge, that will set you apart from 99% of people that just talk about doing a startup but don't actually do it. And then something else to consider, especially in Southeast Asia, is think beyond your local market. If you're a Thai entrepreneur, you will naturally be thinking about what the Thai consumer wants, what Thai businesses want, but over time, over the last 5, 6, 7 years, we've seen this evolution of what constitutes a strong startup in Southeast Asia, and that is a company that is looking at Southeast Asia as a whole. They're looking at consumers in Indonesia. They're looking at businesses in Malaysia. They're trying to create a platform or product or service that works across Southeast Asia, and that's where we're seeing the highest valued companies. That's where we're seeing the most impact in founders and entrepreneurs that are trying to create something that works across the region, not just their local market.
All right, Jimmy, what about you?
I think Justin's point on just starting is a really important one. If you look at GGV's portfolio across globally, China, Latin America, the US, India, and also Southeast Asia, we've invested in more than 250 companies over a 20-year period, and about 50 of them are unicorns. And if you look at the unicorn founders, they're usually in their early to mid-30s. They started something before they fail, or they work in a bigger company and they've seen how to scale teams from a 10-person team to a 1,000-person team. And so I think a combination of, if once you've worked in a big company and you've seen how it works, get out, start your own company, get the first couple of failures out of the way, or maybe even you might have, maybe even the first one might be successful for you. But I think just start. And if you think you've seen enough of how a big machine works, go out and start your company, because you probably know better than most people how to scale a team from 10 to 1,000. So just start. And I think it's really important to think outside of your market, because if you look at Thailand is the size of half a province in China, right? Like a province in China is more than 100 million people. And I think a lot of Thai founders that I meet, like what Justin is saying, they typically think about Thailand first, but I think having that pan-Southeast Asian perspective is really important as well. And the last point I would raise for founders in Southeast Asia is that increasingly we're seeing a lot of cross-pollination between India, China, and also Southeast Asia. Chinese companies and founders looking to start in this part of the world, and also Indian founders coming in, and also Southeast Asian founders looking to learn from China and India. And I think increasingly having that sort of crystal ball or that North Star of your business model equivalent in China and India, and understanding those really well is important. I'm not saying copy one for one, but really understanding who your equivalent is in China and India, what challenges they've gone through, so that you don't repeat the same mistakes. Let people make the mistakes for you and you learn from them.
Thank you. Let's talk about Bangkok. We're here in Bangkok, and you guys have portfolio companies here. Like, what drew you to invest in your portfolio companies that you have here in Thailand? Like, what were the key items that were like, all right, we're going to invest in this company? Justin, you want to?
Sure. So I wouldn't say that there is anything necessarily or uniquely Thai about these founders, about these startups when we invested. When we invested in these companies, we invested because we thought that they were extremely strong entrepreneurs, the operations were very good, the product or value proposition that they offered was extremely strong, and so we invested in them for that reason. The companies that we have invested in Thailand, they tend to skew actually more towards the business side, so B2B, B2SME, and this one was a little bit unique in the sense that when you're selling to businesses, you really need to understand the pain point, like because these are very particular, they're very niche. They usually have a finite operating budget, and the sales cycles to sell at businesses can be very, very long. And the reason why we invested into these particular companies is because the founders really understood the needs, they knew how to speak to those businesses, and they knew how to sell to them. So I wouldn't necessarily say that there was anything that differentiated them from a strong Indonesian entrepreneur or a strong Malaysian entrepreneur. What we loved about them is that they knew their core demographic, they knew their core customer extremely well, and that's why we invested.
What about you, Jimmy?
Yeah, so we have a portfolio company that's here. It's Grab. So not founded in Thailand, but Grab is in. Can I see how many Grab users in the crowd? Grab food, Grab taxi, okay. So a lot of people don't know this, but Grab is actually a very key market. Thailand is a very key market for Grab, especially for Grab food. Because Thai people are so passionate about food, and I think the Thailand portion of Grab food is actually one of the largest contributor to the total revenue. And a huge chunk of that is also because not just Thai people are passionate about food, but they also spend a lot on food. And the GDP per capita is relatively high compared to other markets. And the percentage of wallet spend that's on food in Thailand is also very high. So when we were advising Grab and thinking about what new markets to enter, Thailand was definitely one that was very, very attractive for us in terms of being online, being very heavy users of app, and also being very passionate about food and willing to spend that money on digital services like Grab.
Gotcha, thank you. Now bringing it back to the handful of founders in the audience, Dimmy used to be a founder. What was it like being a founder, and now what's it like being an investor, and the crossover, and how did you cross over into venture capital as an investor from being a founder early on? And then what were some of the horror stories or difficulties and challenges that you experienced as a founder that you can, share with the audience and help them through these type of horror stories to avoid those?
Sure. My team only ever grew to 5 people, so I wasn't really a big founder. So I worked for a small venture capital fund called Mangsul Ventures before I became an entrepreneur. And I left for business school, and the first 1.5 years in B school, I was just working on my startup. We set up a team of 5 people who were just working on it all day long. We skipped classes. And when my first startup failed, I actually wanted to go back to doing another startup for Indonesia. Specifically, I'm actually Indonesian, so I didn't want to go back to investing anymore. I wanted to continue being a founder. Looking back at the 1.5 years that I spent being a founder, I think it's really lonely. Nobody really understands what you're going through and why you're passionate about the problem that you're solving, besides your core team of 4 or 5 people. And I think one of the challenges that we face is often when you meet investors, especially angels and seed stage investors, you're trying to cast a wide net, because you have this big dream, and if you don't cast a wide net, it's really hard to find people to invest in your company. And people always ask for more data, they spend more time with you in India, and they just don't end up investing. It's so frustrating. We must have met about more than 80 to 90 angels over that 1.5 year period, traveling around the US, meeting angels and seed investors all the time. So that's a point of frustration, is how do you stay motivated while meeting angels and seed investors who are turning you down and asking for your data all the time, even when they're not intending to invest in your company. And then the other thing that I sort of feel really passionate about is building a tech team. And back in the US, I had a CTO who joined us for 1.5 years. He was working totally for free. And it was so difficult to find this person. And so reflecting back on the founders that I work with in Southeast Asia, if it's difficult for me to find a CTO in the US, I can imagine how difficult it is for you guys to find a CTO or a VP of engineering in this part of the world. So that's something that at GGV Capital we're looking to help. We want to build dev houses and outsourcing and hiring centers in India for our portfolio companies in Southeast Asia, so that it makes recruiting a lot easier. And I think that's really important for founders from this part of the world. So those 2 things, I think, being lonely in the struggle and having a core team to keep you motivated throughout fundraising and selling your vision to people who sometimes don't care about it, And number two, creating a really good tech team. And within GGV Capital, trying to kind of build that capability for our founders. Those are the two things I would say are really important.
Thank you. Thanks a bunch. And how important is it for founders to do their research and building up a really strong story? So when we invest in entrepreneurs, a lot of it is you meet the entrepreneurs, you meet the rest of the team, and it's like a lot of people in the US compare it to dating. Like, oh, okay, it's similar to getting married to somebody, right? You're gonna build a relationship for multiple years. And so in the early days, when you're meeting the entrepreneur, you have to listen to their story and see if it aligns with your values. So what are some important things that founders here can learn in terms of building a compelling story that, would actually really help be a key decision maker for Golden Gate Ventures and for GGV?
This is a good question. I think a lot of founders underestimate the importance of narrative and story and brand building when they create their startup, when they're hiring, when they're speaking to an investor. Some of the best founders in our portfolio, some of the best founders, period, are salespeople. You are selling the concept, you're selling the vision, not only to investors, but to new hires, to your co-founders. There's a reason why some of the strongest CEOs in the world today, they are perceived as having this force field around them that makes it seem as if everything's okay or everything's super strong. And you cannot underestimate that. That is such an important skill to have, to know how to tell a story. Because this is what's going to get investors passionate. It's going to make people quit their jobs to join you. It's going to resonate with your consumers. It's going to resonate with your customers. And it's something, fortunately, that I think can be learned, but too many people think that if they build simply a good business, then that's all. That's not all. Not only do you need to build a good business, but you need to communicate to others why it is a good business who might not immediately feel that way. And this is something that, when I first started in this industry, I thought that if the founder had a good startup, if the traction was good, if he was moving in the right direction, then that would be enough. It's not enough, especially when you're going out into the market to fundraise. If you're going to fundraise and these ticket sizes are going to get larger and larger as you go from pre-seed to A to C to growth to pre-IPO, all of it is still so indelibly tied to the story around the startup.
All right, Dimi, what about you? What about the story?
Sure. The story is so important. So at GGV, we invest at a slightly later stage, Series B onward. So perhaps it's a bit different where the numbers is a huge part of the story at GGV. And I think that the story is still really important, but the traction is also really important when you're at Series B and Series C. But I want to give an example of a really interesting story for one of our portfolio companies. We invested in Hello Bike, which is now the biggest bike sharing company in China. When Hello Bike first entered the market was saturated with bikes from Ofo and Mobike, who you guys know now are struggling and actually shutting down in many geographies around the world. And Ofo and Mobike were dominating in the tier 1 cities in China, in Guangzhou, in Beijing, and in Shanghai. And they were hitting all the vanity metrics, right? Bikes on the street, what's the GMV, how many people were using the bikes, monthly active users, all that sort of stuff. And this Hello Bike founder came along and he actually told us, you know what, forget about the tier 1, tier 2 cities. No one is helping people in tier 3 and tier 4. I'm going to go to the small towns in China, small cities that no one is doing anything about. I'm going to build, slowly put bikes on the street, but build the retention, the engagement, and the loyalty on my bikes. And then I'll go to tier 1 and tier 2 and compete later on. Right, you fast forward 5 years later, Ofo and Mobike are pretty much gone, and Hello Bike is number 1 in 400 cities in China. Right, those two people told two very different stories. One was a tier 1, tier 2 city story, which is I'm going to go to Shanghai, Beijing, and Guangzhou. The other guy was a very contrarian story, which is that I'm going to go to cities with less people and build my bike sharing app over there, and then enter tier 1 and undercut on price and have people move over from Ofo and Mobike to Hello Bike. So I think the story is so important, and I think there's no right or wrong, because in the example I just gave, one is has turned out in retrospect to be a wrong story and the other was a right story. But at that point in time when people invested in Offer and Mobike, they sound like amazing stories. And it was because of that story that got them the funding in the first place. So I think the story, like Justin said, is so important. But when you are a founder competing against the big guys, don't let their story crush your story. Because even if your story is different, even if your story is unique, it's contrarian, you might just have the right story.
Brilliant. Thanks a bunch. Moving on to a venture scalable business. So you hear about Justin and Demi have shared their insights from investing in large companies like Grab and HelloBike. But there's a difference between having a really good idea that could be a good business and earn you a lot of, pretty decent money. But then there's the difference between being a venture scalable business and potentially being a unicorn. Can you guys share the differences in terms of how you can identify that and maybe some insights and best practices that these founders can take home from that?
So there's a lot to unpack in this question, and there are many different ways to answer it. For us, or me, how I kind of interpret or identify a VC backable business or VC backable startup would be the ability to scale extraordinarily fast. So many businesses, for example, brick and mortar businesses, if they're successful, if they're growing in a very linear rate. Startups, tech-enabled startups, they have the capacity to grow at an exponential rate. So, for example, if you were a fashion store, like selling T-shirts, selling clothes, you could get from 0 to 100 customers in, let's say, X number of days, X number of weeks. If you were doing this for a tech-enabled startup or you were selling clothes online, you would be able to get to 0 to 100 customers in a day. You'd get to 0 to 1,000 customers in 2 days. You could go to 0 to 10,000 customers in a week. And these that kind of scale, that kind of growth is possible with a VC backable startup. And that's what VC is generally optimized for. If and when we put money to work, we want that money to go towards a startup that can conceivably become a unicorn. There are many brick and mortar businesses, there are many offline businesses that could potentially get it to that point, but it's over a much longer time period. And for VCs, we want to back companies, we want to back founders that can get to these very high value, this very high impact in a much smaller window. That's what we consider a VC backable business.
What about you on the later scale, the later stage side of things, Dimi?
I think this is such an important question, and I'm always very honest with founders who I meet. I meet a lot of founders who have really profitable businesses, and they want to raise VC funding because the media says VC funding is good, or the media over glorifies VC funding. And I think I'm not blaming the media. I'm just saying we all have a part to play in this, but we over glorify raising venture capital, because the moment you raise venture capital, you open up your boardroom, you put 2 people in your boardroom, you have to answer to them every quarter, you have to churn out these reports for your board meetings, you have to answer all their questions whenever they want to meet you, you have to send them your data all the time, and so it's like lifting up your skirt and showing people everything that's underneath, right? And it's sometimes you don't have to do that. You can build a really profitable business, take home a couple of million a year, and live a very happy life with your wife or your husband or your kids, and that's totally respectable and it's totally fine. Where I think that's something that I'm usually very honest about when I meet founders, and I tell them, like, why do you want to raise VC money? Why do you want to build this big business? Why not just make really good profits and be happy? And if they have a good answer to that, that's when I think maybe they know what they're doing, maybe they know why they want to raise VCs, but a lot of founders don't really know why they want to raise VC funding. So I think having that, before you even think about the opportunity, thinking about yourself, is this the right kind of funding for me? Do I want to grow at an exponential rate and have my team grow from 10 to 100 in a few years' time and have to manage that many people and be responsible for people's lives? One of the best quotes I heard from a founder before was that there's this famous quote by the CEO of Coca-Cola that says, you're always juggling a few things in life. You're juggling the work ball, the family ball, and the friends ball, right? But the family and friends ball is like a glass ball. You cannot drop that ball or it will crack and you can never put it together. But the work ball is a rubber ball. But if you're a founder, the work ball is like a rubber ball that contains many glass balls because you're responsible for every single employee's lives i.e. their glass ball within your rubber ball, right? Are you ready to be that sort of person who want to be responsible for thousands of people's lives? I think those are the key questions that you have to ask yourself. What's your vision and mission and purpose before you raise VC money and try and grow a really big company?
Yeah, and just wanted to add to that. 100% agree with the idea that we've over-glorified venture capital. Raising, if and when you decide to raise, when you bring an investor onto your cap table, that is a marriage that's going to last for the next 5, 6, 7, possibly 10 years. This is a person that you're going to be working with extremely closely for an extremely long period of time. And many entrepreneurs, when they raise that first round of financing, they don't take that into account. Not only that, but after you raise your first round of financing, chances are there's going to be a second, there's going to be a third, there's going to be a fourth. It's the start of a journey that will last 10 years or more in many cases. So if you can grow your business, if you can see a great payoff, if you think that you can get from point A to point B, and point B is huge growth, huge traction, huge valuation, without bringing on venture capitalists, by all means do so. Only take VC if you need that extra injection in a very short period of time to achieve milestones that perhaps would have taken you 2 years to get. Now you can get there in 2 months or 3 months. But take it seriously, because it's not just one shot and you're done. That first injection of capital, the business will grow, and then you're going to need more and more and more to keep that growth up. That's why there's this perhaps this misguided focus on growth for the sake of growth in the United States, in China. And in many ways, I think that there is something to be said for that strategy. I think a lot of amazing companies have been built from that strategy, but there have been just as many companies that took that money, weren't able to grow, and they just collapsed.
So I can chime in here with the Silicon Valley perspective as well. When we meet a lot of founders, it's very interesting because they talk about exit. And so you have a lot of entrepreneurs, they start a company for two reasons. One is that there's a problem that is just terrible, whether that's buying insurance or having to go to the pharmacy and not having your certain pharmaceutical or your medicines available at a pharmacy, so you have to wait 3 weeks and order it from another pharmacy and potentially wait without your medicine and even become more sick. Real problems where entrepreneurs try to solve that. Or there's another class where you have buzzwords like artificial intelligence, blockchain, cryptocurrency. So you see these two different classes of entrepreneurs, you know, the ones that really want to solve a problem, that are driven with conviction and passion about helping a certain population. And then there's the other class of entrepreneurs that are kind of riding this wave of trends. So for example, artificial intelligence, computer vision, natural language processing, blockchain, security, infrastructure. You're starting to see more companies or startups die in the second group, so following a lot of the buzzwords or the hype trends. And so one thing from Silicon Valley that you're now starting to see, even companies that have raised a lot, like millions, almost billions of dollars from top investors. How many of you heard of the SoftBank folks that invest in companies? Any? There we go, we got a few over here. So now you're starting to see a lot, what they call a graveyard now. So these startups that have raised money, billions, multi-millions of dollars from large investors that are now failing because they're not riding the actual market. That a lot of it was just generated because of hypes. And so you're seeing that with electric scooters in Silicon Valley as well. You have 3 companies that are have raised billions of dollars, all for the little electric scooters, but I'm sure you guys can share as well, that are not really making any money. They're focusing on growth. They're hiring like the top engineers, but you know, you have this trade-off. So bringing it to the next topic on exits, would love to get your guys' insights on exits. Does that mean that when you start a company and you're trying to solve a problem, do you actually want to get acquired by a larger company? Do you guys want to acquire another, you know, large industry incumbent? So what do you guys see on your end in terms of exits in your portfolio? Do you have companies acquired by Tencent? Do you have companies invested by Alibaba? What are the trends on that you guys are seeing? Justin?
Yeah. So like I said, we've invested in about more than 250 companies over a 20-year period, about 50 to 60 unicorns. 40 we invested before the unicorns, and 15 and more we invested after the unicorns. But not necessarily all have been exited yet. Some are still stuck in paper valuation, and we haven't been able to sell our shares. So we're pretty unique in that our partners have brought companies public in about six to seven different jurisdictions around the world. The US, China, Hong Kong, and also in Europe. Exits are really, really difficult. And I think specifically for Southeast Asia, we look at a lot of trade sale and big strategic acquisitions from East Asian conglomerates, like Japanese and Korean conglomerates, and also Chinese tech conglomerates, and increasingly as well Indian big tech companies who are looking to expand into Southeast Asia. So I think Southeast Asia will, for the foreseeable future, be dependent on acquisitions as a form of exit, and also secondary sales, right? So you have some really big Indian startups where the founders are buying back shares because they think there's more upside in their shares, and they're buying back shares from their investors, and that gives the investors a bit of exit as well. But I think IPO is really difficult for this part of the world. I think for people looking at IPOs, you have to broaden your set and look at Australia as well, potentially SGX, look at Hong Kong a bit more. Well, Hong Kong might be a bit difficult now, but cast your net wide and don't just, NASDAQ and NYSE is always ideal, but don't just target that. Cast your net wide and think about where you can exit. Those are the few things I'll be thinking about for Southeast Asia.
Yeah, I just concur. I think for the next 5 to 6 years, majority of the acquisitions in Southeast Asia are going to be born through corporates, tech companies from China and overseas looking to acquire to get a foothold, as well as regional unicorns such as Grab, Gojek, Tokopedia that are acquiring startups to roll out or flesh out their product or value proposition. I think over the next 5 to 6 years, however, we're going to start seeing institutions, or we're going to start seeing a little bit more capital inflows to flesh out what the late stage pipeline looks like. I think the reason why this is so tricky to answer is because Southeast Asia has not yet had a long track record of meaningful exits. So there's a science to it, there's a process to it that many institutions in the region don't fully understand. So it's going to start off small with these small acqui-hires, these small acquisitions, maybe selling to regional players, in the rare instances selling to Chinese companies like Tencent or Alibaba. And then as kind of investors walk away happy, as entrepreneurs walk away happy, as bankers walk away happy, there'll be more processes in place to help orchestrate more and more of these sales. More capital will be available. More outside investors will be looking at opportunities inside, and it's just going to evolve over time. Southeast Asia, in some ways inexplicable reasons, it's gone through a bull period, just a bull run of just growth on growth on growth. And so I'm very optimistic that this trend will continue, and now we'll see the same kind of similar growth in acquisitions. But we'll see. It's too soon to say.
Makes sense. Time will tell. Let's talk about talent. So talent is one thing that you need to have, especially in Silicon Valley. Talent in terms of like your engineering team, your product team, your design team. What type of talent trends are you seeing here in Southeast Asia? Dimi, you mentioned Vietnam and artificial intelligence. Can you share more about that?
Sure. I think Vietnam is so interesting. I don't know if you guys know this, but many American universities have fellowship programs that to compensate Vietnam for the Vietnam War, and they will go to Vietnam, find the best CS and engineering graduates, and put them in PhD programs in the US, fully funded, under the condition that they will return to Vietnam in the future after doing a year or two of work experience in the US. And so Vietnam is brimming with talent, especially in deep learning and machine learning and AI. And I find that really interesting as well about Vietnam is that Vietnamese SaaS companies actually have the potential to go global. So we looked at a few interesting SaaS companies out of Vietnam, and a huge chunk of the revenues is outside of Asia. It comes from European enterprise clients and also American enterprise clients. And so I think it's really interesting that Vietnamese founders are now building SaaS companies for the global market. So talent in Vietnam, I think the engineering talent is pretty deep. In Indonesia, I would say it's pretty shallow, and I'm Indonesian. It's really difficult to hire and retain Indonesian tech talent in Indonesia. In Singapore, I think the talent pool is a bit deeper, but the market is really small. So how, where are we going to look towards for talent? And I think the answer is India. India will continue to play, Indian dev houses and engineering houses will continue to play a very crucial role, I think, in the next probably 5 to 10 years until we build up this talent pool in the big countries in Southeast Asia like Indonesia and Vietnam. And so I think learning how to tap and learning how to work with Indian engineers and Indian dev houses and finding hybrid models where you can have a CTO that's managing an Indian VP of engineering that's managing a team of 200 engineers in India and work through video conference and have daily huddles that allow you to manage and build a culture even with a remote engineering team is going to be really important.
Yeah, just to echo that point, the only thing that I would want to add is that that's another talent that you can and should learn. I would say that in Southeast Asia, having a distributed workforce kind of lends itself to the region, especially if you are very early stage. You have a lot of technical hubs nearby that can be very suitable for that in Vietnam and in India. But what many entrepreneurs are very scared of doing, or what they're hesitant to do, is to manage those teams remotely. And I actually think that's something that can be learned. It's an advantage that many other startups, many other entrepreneurs in other markets do not have, or do not have readily available access to. But some of the best startups in Southeast Asia, when they were very, very young, they actually engaged freelancers. They actually engaged in dev shops in Vietnam or in India. They use that as kind of a precursor to a first product, a precursor to a beta. And then with that product, they were able to hire a team. They were able to hire a formal CTO and kind of scale the company up informally or formally after that. It's not something that I generally see elsewhere, but it is something that I do see now, and I think I should see more in Southeast Asia given the geographic conditions of this market.
And just to echo off of that, so I'm involved with the World Economic Forum Global Shapers Group, and we have 400 chapters around the globe of young innovators under the age of 30, and you're starting to see more talent come out of countries like Laos. For example, a couple of friends just started a company that does 3D printing, but the market is now being addressed to 3D print materials for houses. And so you're seeing a need from innovation also address the need in local markets, not only in the metropolitan areas, but in the more rural areas as well. So you can serve both demographics in the urban and rural areas too. And one interesting thing that I learned here yesterday in Bangkok was talking to a couple of engineers at Chula, a really, really awesome engineering school here, was that there's now a hybrid program with 3 other universities. I believe there's one in London and then there's another in Chiang Mai where they're launching a new bachelor's and master's programs, correct me if I'm wrong, in robotics and artificial intelligence. And so this gives students here in Thailand the chance to study in London. I think it's one of UCL, University College of London, one of those, to go learn from the robotics departments in London, and then there's a couple of other universities involved. And you're starting to see more and more programs like this in different countries. Like Singapore, for example, is really good about sending young entrepreneurs to Silicon Valley, so you can actually get experience on the ground. I think is it 8 months, correct me if I'm wrong, where you can go and learn from other founders in San Francisco or in Los Angeles or New York City, depending on if you're focusing on fashion or finance or artificial intelligence. And so you're seeing more of this global community or digitalization in terms of not being pinned down to one city, but having the opportunity to learn from different ecosystems, which I think as a founder can give you a different perspective and more insights that you can then take back home to address to your local market as well. And to close it off, since we only have a couple minutes left, what type of trends do you guys see in terms of problems that are not currently unaddressed? So for example, in San Francisco or in Silicon Valley, you see a lot of mental health startups that are now popping up overnight because there's a huge problem in the United States with unfortunately, depression, anxiety, and burnout from working too much. Are there certain problems that you're now seeing in Southeast Asia or in Asia? Or if not, are there certain problems or verticals or industries that you would suggest founders go take a look at and disrupt just because they're ripe for disruption?
So the two problems I think that have not been solved are education and logistics. I'll talk about logistics first. We are really interested in first mile trucking and the mid mile. So trucks who are transporting goods for big brands from the ports to the distribution centers and the warehouses, and also warehouse technology. I think that is still pretty unsolved for in this part of the world, primarily because there's so many islands, people are quite spread out around Southeast Asia. And that problem is very acute in the sense that the truckers are not treated very well. They are on the road more than half of the year away from their families. They are paid close to no money. And some of these trucking companies are about 30% utilized. So if they have 100 trucks, only 30 trucks are being used throughout the year. And I think that severe underutilization of our current asset base in logistics is a huge problem that is not solved yet. On education as well, I think education is just in general. In places like Indonesia, the quality of education is so bad. And if it's good, it's private, and it's only for people who can afford it. So rather than trying to look at a public education system and say that how can you be better, how can you create technology that can work alongside public education systems to supplement the school education, I think is something interesting to look at.
So definitely want to emphasize the logistics side. I think logistics is going to be earning the lion's share of investment of venture capital over the next 3 to 5 years. I think there's so much money to be poured into that. I think there's so much upside. I think there's so much that needs to be done to repair infrastructure, to provide logistics solutions across the region. That's going to be a huge industry for the next few years. And then if you are an entrepreneur here, thinking about that, thinking about what kind of value you can add to that supply chain, kind of like the first mile or last mile or customs, warehousing, smart warehousing, so on and so forth. I think that there's a ton of potential there, and you should actively consider that. One surprising trend that we are starting to see much more of is the rise of social commerce as well. So I think over the last few years, you've seen an explosion in activity on marketplaces like Tokopedia, Lazada, Shopee, etc. But what you're starting to see now is kind of the counterpoint to that, just an alternative business model called social commerce, where a lot of activity, a lot of transactional activity is being started and closed by your neighbors, your friends, your family. They are selling products to people that they know. They're selling products to people that trust them. And it's slowly but surely evolving as kind of a counterpoint to the marketplace model, where instead of going to a platform to buy everything that you want, you're going to somebody that you trust to buy clothes, to buy electronics, to buy even financial products like insurance. And this is another trend that I expect to see more of over the next few years.
All right, well, there you have it, folks. So thanks a bunch for the audience members, and wishing you guys a great rest of the afternoon. Thanks.